what on earth is going on with EXP stock? Well, that's the question I'm constantly being asked by other friends in the industry, agents here at EXP, and even my mom asks me all the time. So that's the question that we're going to try and answer today. My name is David Tortellini. I'm with EXP Realty. I am not a stockbroker, so take this advice with a grain of salt, but hopefully we can provide some information for you today that'll help you better understand what's going on with real estate stock prices. All right, let's get to it. All right, so really we have this situation right now where EXP stock has gone down significantly. At one point in early November, it was trading in the mid 50s. And as of today, we're looking at $13, $14 a share, something like that. So that's a pretty far drop off considering how well the company is doing financially and agent growth. And we'll talk about all that. So I'm going to take a step back, and I don't want to blame all of this on Zillow, but I'm going to blame a lot of it on Zillow. So big thing to look out for is back on November 2nd of 2021, Zillow announced that they were shutting down their iBuyer program. Now, what's their iBuyer program? What is an iBuyer? So an iBuyer is an institutional buyer. It's not an internet buyer. I think a lot of people think iBuyer, internet buyer. It's not. So institutional buyers, so big giant corporations that are buying up tons of properties. So Zillow was using its Zestimate and its iBuyer program to buy up tons of homes. Well, long story short, it's just a failure, and it did not work for them, and it was a bad system. I think they will admit that. And so they ended up cutting about 25% of their employees, and it was a pretty big deal. And I think what ended up happening because of that is it really signaled to investors that a shift in the real estate market was coming, and that maybe real estate was no longer a good investment. And part of me thinks that it was misleading, and that it was really just Zillow mismanaging a department, which happens with companies, and that signal maybe shouldn't really be impacting the other things that are going on in the industry, but it did, and here we are. So if you take a look at what happened with Zillow, their stock price went from 105.72 down to 65.86 overnight. So that's like a 40% drop in stock price in a day after they announced this. And you might anticipate something like that for that company, because obviously when you announce you're cutting 25% of your workforce, that's a pretty big deal, and that is a good indicator that you are maybe not quite as financially viable as previously thought. All right, and so that's been steadily decreasing, is now, as of right now, 39.51 as of filming this. So we'll see where it continues to go. So they're down about 60% over their pre-announcement high. So kind of a good barometer for what's happened for everyone else. So you can also take a look at EXP. So where was EXP? So on November 1st, they were at 53.59. November 3rd, they started dropping, went down to 45.94. By December 1st, 34.50. As I mentioned, now we've been steadily declining all the way down to, I think we're at $13 and something cents right now. So a pretty big deal, but it happens to also coincide directly with Zillow's announcement. The previous 90 days, EXP had been just trading between $40 and $55. So it had been staying really strong and pretty consistent in that area, with a couple of little dips down to 40 and back up, but it was doing really well. And then you have other companies like Realogy has dropped from 20.65 down to 9.87. Compass went from $17 down to $4.05 a couple days ago. And then Fathom went from 27.63 down to 7.96. So as you can see, this is an industry-wide issue. And I think right now, what you're looking at is stock prices falling because large investors look at real estate stock as a bad investment right now, because there seems to be an idea that, with rising interest rates, with a hyper competitive market, not as many listings to sell. I mean, a lot of pretty decent reasons to believe this, that real estate is not a good investment right now, at least not real estate companies. Their idea is that, if they're buying stock, they want to see that stock go up, they need to see the company doing well. And if there aren't houses to sell, if people aren't buying, then that's going to be a problem. And the value of that company isn't there. So you get into a whole lot of that, and what you really end up having is these large investment companies making moves in a sector as opposed to looking at individual companies and seeing how they're doing. You have some of these really long-term established brands that aren't changing very much, and then you have a company like EXP. So let's talk about what EXP has done in terms of an actual company since that November 2nd announcement. So, all right, so let's just start with agent count. At the time of that announcement, EXP had 68,000 agents. They announced 68,000 on November 5th. So we'll say 68,000. Well, we just announced 81,000 agents today. So we are up 13,000 agents in that amount of time. That's phenomenal. So we're adding agents like crazy. All right, so then we can look at things like Q1 revenue for 2022 was $1 billion. So that was pushed by 55% agent growth year over year. And then that also led to a gross profit of $83.5 million. So you're looking at an extremely profitable company that's growing by around, anywhere from 500 to 1,200 agents a week. So this is a company that's growing like crazy. It is profitable, and I think that's where it's different than a couple of its competitors in that it is making money. It announced a 4-cent cash dividend to investors this quarter, and it's done that several times previously, so continuing to give back to the investors. There really isn't anything about the company right now that says that it's not a financially viable company, that it's growing like crazy. We've opened several countries since that announcement. So I think, Greece, Dominican Republic, New Zealand, looks like we're going to be opening Dubai and Chile soon. So, I mean, the growth continues to be there. So to lump EXP in with all the other real estate companies, and in particular Zillow, I think is a disservice to EXP. It's a disservice to the shareholders. And, and it's really, a disservice to really all the investors who are giving their money to these companies. But, so what does that mean for agents at EXP or people who are looking to buy now? I mean, if you really think the real estate market is going to plummet long term and that all these companies are going to basically be going out of business, then definitely don't get involved in EXP stock. But as an agent at EXP who gets EXP stock awards and can do we can do investing of 5% of our income at a 10% discount once a month, I am going to continue to do that. I'm going to enjoy being able to buy it at a low price because I really believe in this company. I believe in the idea that we're going to be at 500,000 agents in 5 years and that we're going to be at 1 million agents in 10 years. Like, these are numbers that are completely achievable because of the model of this company. I only see amazing things on the horizon, and we'll see what happens. But I'm looking at this as me getting my stock, at a third the price where it should be, and I'm going to continue to invest. But that's just me. Again, not a stock professional. I am an agent at this company, and I do love it. But everyone needs to do what they think is right for them. And again, you can just take a look at what's going on in the industry overall. I think just the idea that people, are invest in sectors instead of looking at the individual company, maybe gives a bit of a false impression of where a company really should be valued. Okay, well, I hope that helps put some things in perspective. So do me a favor and comment below. What do you think is going to happen to the real estate market in the second half of 2022? Do you think we'll still have low inventory and that'll push prices up? Or do you think we're going to see some sort of balancing in the second half? Then what about stock prices? Do you think those will continue to go down? I'd love to know what you think. Again, my name is David Tortellini. I'm with eXp Realty. Please like this video, subscribe to this channel as we continue to bring you great information about EXP and all things real estate.